Thanks for clicking. We had a big week in China news this week as President Xi Jinping secured his third term in power as economic and real estate difficulties continue to mount. Indeed, celebrations of Xi's appointment to a third term as president were short-lived as we received multiple reports that money is pouring out of China, with foreign and domestic investors looking for ways to get their money out of the Communist Party state. China's GDP numbers also finally came in, which had been delayed during the 20th Party Congress. The numbers were better than expected, although some warning signs persist as ZeroCovid remains a major concern. Finally, we also received China's real estate numbers for the month of September, showing that despite all of the measures undertaken by Beijing in the run-up to the 20th Party Congress, confidence in the real estate market remains shaky at best.
Totally my fault.
So what I want to do today is skip over Evergrande and instead look at the multiple reports showing money leaving China. Then I want to go over China's GDP data for the month of September. Then we'll discuss the real estate crisis and the continual problems that are showing up in China's data. China's real estate crisis is entering its second year and showing no signs of slowing. We'll continue to have updates out on this crisis on this channel every Friday. Click like and subscribe if you want to get those updates. But for now, let's get into these reports. As mentioned, in the aftermath of President Xi's appointment for a third term as president, we received numerous reports of money leaving China. Indeed, overseas investors sold 17.9 billion won of Chinese equities following Xi's appointment. The move tipped the scale of funds leaving China, which, if it holds, will represent the first net outflow of money from the Communist Party state since 2014. But it's not just foreign investors attempting to get their money out of China either, with many local Chinese moving money out of the country as fast as possible by law. According to the Financial Times, during the 20th Party Congress, lawyers received a multitude of phone calls from local Chinese with instructions to execute plans to move money out of the country. So the wealthy, both foreign and domestic, are trying to get their money out of China through all legal means possible, and also through alternative means. According to Reuters, over $45 billion has been moved out of the country through what economists are calling illegal or semi-legal channels. So China is seeing a real problem with capital flight, due in large part to the real estate crisis, to the continuation of ZeroCovid, and to a regime that is seen increasingly unfriendly to business.
Got that right.
But it's not just the unfriendly regime of President Xi that is causing the flight of capital out of China. It was reported this week that a strong dollar is seen as a much safer currency to be holding right now than the yuan. Indeed, one of the problems that China is facing is that it has to stimulate its real estate market, and as we've seen here in the West, one of the only ways to do that is through lower interest rates. However, this comes at a time when the US dollar is ultra strong and the US is raising interest rates. So investors are removing money from China and going towards the US dollar, which is seen for now as a much safer asset. So China was having problems throughout this year securing funding, due in large part to the real estate crisis, the defaults, and the downgrades that we've talked about so much on this channel. However, now that the United States is raising interest rates and the US dollar is so strong, this is only compounding the problems that China is having in stimulating its own real estate market.
I'm what counts out here.
And this will no doubt hurt China's economy, which, as we'll see, has shown some signs of recovering. The GDP data for the third quarter came in this week, showing a 3.9% growth rate, faster than the 3.3% that had been anticipated. While the higher than anticipated GDP growth rate in the third quarter of 2022 is good news in and of itself, China's economy is already starting to show signs that it is sputtering amid zero-COVID policies, with September's data showing weak imports and retail sales. And with President Xi using the 20th Party Congress to announce the continuation of the zero-COVID policies, it's not clear the extent to which China will be able to sustain this economic recovery with the continuation of the zero-COVID lockdowns, and especially with a struggling real estate sector. Indeed, data from September showed that China's real estate sector is continuing to slow, despite China's lowering of mortgage rates encouraging the banks to lend, and easing home ownership rules over the past few months. China's new home prices fell for the 13th month in a row, falling 0.28% month over month in September. So despite the stimulus efforts that we've talked about so much on this channel over the past few months, consumer confidence is not returning to the real estate market in China. One resident of Zhengzhou said that I'd be scared to buy a pre-sale property if I'm going to buy another home. That same resident that was interviewed bought a pre-construction condo in 2020, only to see construction stop in 2021, and has, along with other purchasers, tried multiple times to get the authorities to force the developer to resume construction. We've talked before on this channel about the mortgage boycott spreading throughout China, and how some of these developers have gone years without constructing these people's homes, while still having their money. And this same potential homeowner said that despite all of the stimulus efforts that have come from Beijing in the lead up to the 20th Party Congress, they're not sure that the local officials will intervene to keep construction going after the Communist Party National Congress ends. So there's a real sentiment in China that all of these efforts undertaken by Beijing in the lead up to the 20th Party Congress were not intended to actually help them get their homes, but rather to quell any potential dissent leading up to the Congress. So China obviously has a long way to go before consumer confidence returns to its real estate market. And with capital continuing to leave China, as we saw today, and with the economy under continual threat of zero-COVID lockdowns, and with consumer confidence at the retail level having a long way to go, President Xi clearly has his work set out for him as he begins his third term as president. We'll continue to have updates out on Xi's progress on the economy and on the real estate sector on this channel every Friday. Click and subscribe if you want to get those updates, but for now, thanks so much for watching.